So you want to invest in real estate, but it costs money and stuff, and perhaps at the moment, you don't have a lot of it, so you wait. You and many others. Fortunately, there are strategies that are simple and repeatable that you can use to get started sooner than you may have thought possible. You can literally flip housing from being your single greatest expense each month to something that instead is paying you. And you shouldn't have to save for long to get there. Low to mid single-digit thousands of dollars is about all that it takes. This is more attainable in some markets than others, but if you prioritize building yourself a financially independent future over being in some bougie location, this is for you. The expensive lifestyle can always come later. I'll start off by telling a story of how a tenant bought a house for me while only bringing $1,455.24 to the closing table. Super nice lady living in a property that I purchased who apparently didn't even know the house was for sale and really wanted to buy it for herself, like really badly. I turned her down a couple of times because I just bought the place and I had plans for it, but she was persistent. I told her to get pre-approved and we'd talk numbers. She worked on her credit for a bit, got pre-approved, started working with a competent agent who knows how to deal, and we agreed on a number. $116,000 was the sale price. So that begs the question, how did she buy a $116,000 house for $1,455.24 out of pocket? For reference, her rent was $975 a month. She literally bought the house that she was renting for 1.5 times her monthly rent. Zillow now estimates the house to be worth $165,000. That number is totally plausible, so she gained around $50,000 of equity in 2 years for $1,455.24. That's a 34x return. She bought it when interest rates were basically nothing as well, and I'm really happy for her. She did that by stacking an FHA loan with seller concessions. An FHA loan allows you to buy a 1 to 4 unit primary residence, more on that later, for 3.5% down. Seller concessions make it so that the seller pays a portion of the closing costs, generally presented as a percentage of the total purchase price. If you are buying a hypothetical $200,000 property with 2% seller concessions, the seller would cover $4,000 of your closing costs. Limits to seller concessions can vary based on loan type and property usage, but they are an option to reduce your cash to close. On the surface, it seems like seller concessions would make your offer less appealing to the seller, but if you offer a higher top-line number, it's all the same to them because in effect, they're not conceding anything, but rather the closing costs are baked into your loan. A good agent will be able to express this to the seller's agent so that all parties understand what's going on, and that's how you buy a property for very little money down. I casually mentioned earlier that FHA loans are for 1 to 4 unit primary residences. This is where it really gets fun. Use the FHA loan to buy a 2 to 4 unit property. Skip over basic home ownership and go straight to real estate investor status, transforming housing from an expense or a liability to an asset that pays you each and every month. This is commonly referred to as house hacking. In my experience, 50% occupancy is roughly my break-even point for multifamily properties. That means that if you buy a fourplex, live in one unit, and rent out the other 3, 2 of the tenants are paying your loan, your taxes, your insurance, and maintenance, and the third is generating straight profit, all while you live rent-free in your own fourplex. House hack. Management and maintenance are simple because you're on site, and not to be forgotten, you can make improvements to force equity. House hack. Forced equity is a reoccurring theme on this channel because it's an insanely time-efficient way to build wealth with real estate, and I've leveraged it heavily on virtually all of my deals. I hope you are as excited to learn this as I am to share it. Kind of like a light bulb moment. If not, watch it a few more times. Seriously. But if you currently rent, think about what you pay for housing each month. Imagine what you could do if you didn't have that expense at all. Pretty cool, right? Well, that's attainable if you house hack a duplex. Now imagine getting paid that sum of money each month in addition to not paying rent. That's attainable if you house hack a fourplex. Let's say your rent is $1,500 a month. That's an extra $36,000 that you could have each year doing this. That's 20% down on a $180,000 property every year. Do this for a while, and it's hard to imagine a future where you're not able to retire early, living on cash flow with a multi-million-dollar net worth. A lot of people don't invest in real estate because it's an imperfect product. A perfect product would be something like cocaine. Stick with me. That's why drug dealers tend to make a lot of money. It's perfect because its chances of doing what it's supposed to do are very high, and it'll do it with virtually no delay, and all you have to do is sniff some powder. Easy. And it's addictive. Contrast that to real estate, where it can take years to get the desired outcome, and the cost is extensive research, planning, and sustained action, and often some sacrifice up front. The good of it, however, is that the probability of real estate building your wealth is actually very high, with the requisite combination of research, planning, and sustained action. As we've discussed, you don't need a lot of money to get started, just decent credit and motivation to make that first move. A lot of people find it addictive as well. I keep buying real estate. Hopefully you do as well. It's good shit. So drop the excuses and let's get going. The ability to sacrifice for deferred gratification is probably the single greatest predictor of success. And if you can learn to love what you do, and you can see how it fits in with the big picture and your goals, you'll be smiling through every moment of it. Thanks for watching. Have a great day. Get your knowledge up and go bag a great deal.